Hey everybody, Aaron Dillon here, Managing Director of AG Dillon & Co. I got a pre-IPO company update for the week ending January 26, 2024. Let's get into it. ElevenLabs, a developer of AI-powered voice cloning tools, recently secured an $80 billion Series B funding round, co-led by investors like Andreessen Horowitz and former GitHub CEO Nat Friedman. This investment raises ElevenLabs' total funding to $101 million, skyrocketing its valuation to over $1 billion, a tenfold increase from its approximately $100 million in June of the previous year. That's $100 million round. The funding will enhance product development, infrastructure, and team expansion, AI research, and safety measures. Co-founded in 2022 by ex-Google engineer Piotr Dubowski, and former Palantir strategist Maciej Stanowski, I think that's two Polish folks. ElevenLabs offered a browser-based app for generating lifelike voices and has started focusing on applications for audiobooks, film dubbing, game character voices, and marketing. Despite its rapid growth and expanding client base, which includes Paradox Interactive and The Washington Post, ElevenLabs raises criticism for misuse of its technology and challenges in the voice acting industry. The company, employing 40 people and is planning to increase to 100 by the end of the year, is competing in the burgeoning synthetic voice market against both startups and major tech firms like Amazon, Google, and Microsoft. I used it this past week just to check it out. I converted one of my videos that I do here into Mandarin, and it was great. I sent it to a couple of my Chinese-speaking buddies, Mandarin-speaking buddies, and they said it sounded good. The tones were off, but sounded good, and they just thought I had a little bit of a funny accent, but they didn't know it was an AI. So it was actually my voice speaking in Mandarin. It was pretty wild. Kaspi.kz, a Kazakhstan-based banking and fintech company, was valued at $17.51 billion during its IPO, with shares opening at $92.50, slightly above the $92 IPO price. The company raised over $1 billion, selling 11.3 million shares, an increase from the planned 9 million. This sale benefited key stakeholders like co-founder Vladislav Kim and CEO Mikhail Lamdaskis, but no proceeds went to the company. Operating in payments, marketplace, and fintech segments, Kaspi.kz offers diverse services, including e-commerce and buy now, pay later options. Despite its diversity, complexities, and businesses like e-grocery present risks, the company's valuation on the London Stock Exchange exceeds 19 billion. This IPO occurred amid a cautious investor climate, with the S&P 500 index near a record close, reflecting a subdued U.S. IPO market since 2022. The lead underwriters were Morgan Stanley, JP Morgan, and Citigroup. Klarna Bank AB, a Swedish fintech, is preparing for a U.S. IPO potentially valued at over $15 billion, as stated by CEO Sebastian Siemiatkowski. This follows a valuation drop to $6.7 billion in 2022, a significant decrease from its peak at $45.6 billion. Despite this, Klarna's value rose to $7.885 billion in December after reporting its first quarterly profit in 4 years. The U.S. market, Klarna's largest revenue source, is a strategic choice for the IPO. Klarna is introducing a new subscription service, Klarna Plus, in the U.S., priced at $7.99 per month, offering waived service fees and other benefits. This move aims to diversify revenue streams and boost appeal to investors. Klarna Plus targets approximately 15% of Klarna's heaviest users among its 37 million American customers. I have Klarna currently valued at $8.1 billion in the secondary market. That's 20.5% above its last primary round in July of 2022 that was mentioned earlier. Klarna CEO recently stated on a CNBC interview that the company would go public if investors could get quote unquote triple digits. So it's unclear if that's triple digit percentage gain or triple digit valuation, i.e. $100 billion. That's a big increase from the single billion valuation they're at now. Klarna did rounds at $45.6 billion, $31 billion, and $10.7 billion over the last 4 years. So many of their investors are sitting on negative returns, much less triple digit returns. So it's going to be interesting to see how this one plays out. Brex, a fintech company specializing in corporate cards and expense management, is laying off 282 employees, about 20% of its workforce, as part of a cost reduction strategy amid slower revenue growth. This move follows a significant cash burn rate of $17 million per month in Q4, though down from $22 million per month in Q4 22. Annualized net revenue reached $279 million in Q4, marking a 32% increase year over year, but showing stagnation in the second half of the year. High expenses at twice the level of revenue in Q4 are a continuing challenge. Despite this, Brex has enough cash to last through March of 2026, with the cash run rate now extended to 4 years. The company is also reshaping its customer base and diversifying into expense management software, which currently constitutes a small portion of total revenue. Brex had previously targeted a potential IPO in 2025 with a focus on achieving profitability according to public accounting standards. Brex had a $3.7 billion secondary market valuation, down 70% from its last primary round in January of 2022, where they posted a $12.3 billion valuation. So I hope these guys can get it back going in the positive direction. Figma is offering new equity packages to employees valuing the company at $10 billion. That's a 50% reduction from Adobe's previously proposed acquisition value of $20 billion. This change affects approximately 500 employees who joined Figma after Adobe's acquisition announcement 16 months ago, who will now receive an extra share amount amounting to 70% of their original assignment. Longer serving employees will be eligible for additional shares in the fall. Adobe's deal was abandoned in December due to antitrust concerns. Additionally, Figma has introduced a voluntary exit program, providing 3 months pay and vested equity retention for departing employees. Figma and Adobe deal was abandoned last month after hitting regulatory approval for the deal in Europe. They had snags for the regulatory approval in Europe. Elon Musk's AI startup xAI is currently negotiating a funding round of $6 billion, aiming for a valuation of $20 billion. The company, founded in 2023, last year, is to rival OpenAI's ChatGPT and Google's Bard. Initially raised $1 billion, predominantly backed by Musk himself. So this is going to take it from $1 billion to $20 billion. That's a 20x return from Musk right out of the gate. The current funding effort, designated as a Series B, targets family offices in Hong Kong and sovereign wealth funds in the Middle East as potential investors. This move marks a significant scale up from a startup initial funding round, indicating substantial growth and investor interest in xAI's technology and market potential. Again, X, formerly Twitter, owns 25% of xAI. xAI gets a lot of data from Twitter to train their models. So xAI successfully closing this round at $20 billion will generate a $5 billion incremental valuation for X. Chipmaker startup Cerebras Systems is considering an IPO as early as this year, aiming for a valuation above its $4 billion mark from its 2021 funding round. The company, known for building AI supercomputers, is also exploring private funding options, potentially involving existing commercial partners. Although discussions are ongoing and no final decisions have been made, a listing would align with growing interest in the semiconductor firms in the IPO market. NVIDIA is ripping. So is everybody else in that space. So it's a good time to go public. Cerebras' notable achievements include the construction of the Condor Galaxy 1 supercomputer as part of a project in Abu Dhabi, which cost over $100 million. The company's last funding round in 2021 raised $250 million, led by Alpha Wave Ventures, Abu Dhabi Growth Fund, and G42, with participation from Altimeter Capital, Benchmark Capital, and Co2 Management. Last up is pre-IPO stock performance as of January 22, 2024. This week's winners, we got Notion up 24.2%, Consensus up 14.2%, Hugging Face up 7.9%, Klarna up 7.9%, ByteDance up 5.7%. That's big. It's already a big company. With this week's losers, Airtable is down 8.6%, OpenAI is down 7.1%, Anthropic down 1.9%, Deal down 0.71%, and Databricks down 0.31%. Top valuations, ByteDance, $282 billion, SpaceX at $182 billion, OpenAI at $93 billion, Stripe at $56 billion, Databricks at $48 billion in lead in the current valuation. See more valuation data and performance data on Twitter, X, or LinkedIn under my name, Aaron Dillon. Okay, that's it for me this week. If you have any pre-IPO stock research needs, please reach out. Thanks, and see you guys next week.